from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, President Biden promises change for the better with his new infrastructure law coming at a precarious political moment for the president as polls show overwhelming pessimism across the U.S. about the economy. We will break down the details. Plus, another Twitter-filled weekend for Elon Musk, this time the world's richest person taking on Senator Bernie Sanders. Why Twitter users believe Musk could be hinting at selling more of his Tesla shares. And he is the youngest CEO of a public company on track to transform the trucking industry. I'll be speaking with the CEO of Embark about how self-driving semis fit into the future of logistics. All that in a moment, but first let's get a look at the market. Stocks a bit choppy in trading today. Our Kriti Gupta has the full picture. Kriti, take it away.
Well, Emily, red on the screen today, and really people just liquidating their positions when it comes to stock market. Tech taking it a little bit worse than the broader index, but a little bit split under the hood. Names like Tesla, like Nvidia, down on the day, but then you had your Facebooks, your Alphabets higher on the day, and it's that split tech bid that really ended up with the S&P 500 essentially unchanged on the day. Another thing that really shows that it was kind of a risk-off day was that cryptocurrencies. You didn't see that risk bid show up there either, and even people pulling out of treasuries to the point where you saw a 5 basis point move in the 10-year yield. And it all comes down to one major theme, Emily, and that is inflation. I want to show you a chart here that really shows the month-over-month change in CPI versus consumer sentiment. And it's the side of the chart here that I really want to point out. That white line is the month-over-month inflation change. The blue line is the change in consumer sentiment. You can see they are diverging. This idea that this healthy growth, this recovery trade that's actually pushing inflation higher, well, the consumer isn't really liking it. And that's where you're starting to see the correlation start to dip very, very slowly. So that's going to be the macro picture. I want to hit one micro after hours earnings story, and that, of course, is Lucid Motors. Shares up after hours after reporting some pretty decent third quarter guidance, affirming its 20,000 vehicle goal next year and strengthening its balance sheet to $4.8 billion in cash, Emily.
All right, Kriti, thanks much for that roundup. Meantime, of course, President Biden promised Americans that his new infrastructure law will improve their lives and keep the U.S. economy growing, even as polls show widespread discontent with the nation's trajectory. The president signing the $550 billion measure at a White House ceremony to kick off the week after appointing a group to guide the law's enactment. Our Emily Wilkins is in Washington with all the details. So, Emily, talk to us about the president's words today as he was signing this bill into law.
Well, you saw President Biden hit on a couple different topics. Number one, bipartisanship. Remember, that's sort of who he ran on when he was running for president, was the president who could work across the aisle with Republicans, get things done. This bill is sort of going to be Biden's probably achieving a crowning achievement in that particular area. Getting to work with Republicans on this bill, the hyperpartisanship in Washington is probably going to prevent him from getting anything else like this done. So he's really going to tout this. This also came at a time where President Biden, his approval ratings are very low. He is struggling to deal with inflation, to deal with COVID-19, to deal with the economy. And so this was a moment for President Biden to really take the win, to do a victory lap, to tout this bill and to tout the benefits of this bill. He also alluded a bit to China hours before he's set to get on the phone with President Xi Jinping, saying that this would prevent the U.S. from losing its edge and help it remain competitive against other major economies.
When does this get implemented?
So we're going to see implementation start already. You saw President Biden go ahead and nominate Brian Deese, one of his top officials at the White House, as well as Mitch Landrieu, a former mayor of New Orleans, to be sort of a part of leading a committee trying to make sure that as this $550 billion goes out to Americans, that it's implemented within the White House's vision. And that's taking things into consideration such as speed, really getting the money out there to where it's needed, as well as a social justice component to it, making sure that disadvantaged communities are also receiving funding to this. I spoke with Transportation and Infrastructure Chairman Peter DeFazio in the House just a few weeks ago, and he said once the spring comes, once construction season gets underway in the spring, that's when Americans are really really going to start seeing the effects of this bill.
Now, of course, this is only half of President Biden's infrastructure agenda. What about the other half, the human infrastructure part of the bill that involves social welfare, taxes, and, of course, the most controversial part of this plan?
Absolutely. And that's the one that Democrats are still struggling to figure out how to pass, even though they don't need any Republicans for that. Democrats are dealing with thin margins, and they're a pretty broad, ideologically speaking party. And so it's been difficult for them to come to consensus. What it looks like might happen this week is we could still potentially get a vote on that package within the House. Right now, moderates are holding that up, saying that they want to get scores from the nonpartisan Congressional Budget Office. That office, it scores all the bills. It says, hey, this is how much they're going to spend. This is how much they're going to raise. With rising inflation in the U.S., it's become really, really important for those moderate Democrats to make sure that this bill is fully paid for. If the House does pass it this week, then it goes to the Senate, which is going to continue to tweak it, go back to the House. They're really on a deadline here of, at this point, the end of the year. Usually it's once you cross over into that election year, 2022. It doesn't matter that the election's all the way in November. Once you hit that year, it gets harder and harder to legislate. So Democrats still have a good bit of a path ahead of them on that particular bill as they figure out various components of it.
All right, Bloomberg's Emily Wilkins, thank you for that update. Meantime, the world's wealthiest person spent much of the weekend taunting Senator Bernie Sanders on Twitter. After Sanders repeated his call for the ultra-rich to pay more taxes, Musk insulted the senator's age and asked if selling more Tesla shares would satisfy him. That would, of course, require Musk to pay taxes on the gains. Musk offloaded almost $7 billion worth of Tesla stock over the last week. Our Dana Hall with us to break it all down. So Musk, back at it again. Why is he, I don't know, lashing out or taking the bait this time and now?
Yeah, what's strange is that, as far as I know, Bernie Sanders does not even run his own Twitter feed, nor does he reply to anybody. But Musk is replying to him and, insulted him about his age. I think Musk has very, very clearly feels like a lot of politicians in Washington are too old to be governing. And so he's sort of taking potshots about his age, offering to pay more taxes, saying, should I sell more stock, Bernie? What do you think?
I keep forgetting that you're still alive. We have the exact words, so, we will share them. Want me to sell more stock, Bernie? Just say the word. Bernie is a taker, not a maker. What's he trying to say here?
I mean, I think he just feels emboldened that he is the richest person in the world. And here he is, on the one hand, a government contractor. SpaceX gets money from NASA and the Department of Defense. Tesla has gotten funding in terms of the federal tax credit and has certainly benefited from a lot of public policy. And yet here he is kind of throwing pot shots at a member of Congress who has, along with other progressives, just wants the wealthy to pay their fair share.
So this $7 billion that he's already sold, do we think he will sell more? Why is he selling this in chunks? Where is he going with
it seems to be like a drip, 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 where he's selling a little bit every day. There haven't been any Form 4s yet today, but they could come at any time. And I think he's just kind of like, he doesn't want to do it all at once. Why he's doing it this way, no one really knows. But he has a lot more to go if he's going to actually meet this 10% that he claimed that he would a couple of weeks ago.
And do we understand yet how much of what he sold so far is purely to meet tax obligations and stock sale obligations, and how much additional he plans to sell to, fulfill this idea that he is the benevolent taxpayer?
Yeah, I mean, I don't know if he does quarterly estimates or if he does it all at once, how moving to Texas impacted things. There's state tax, there's federal tax. I don't know what his tax planning strategy is, but he said that he would sell 10% of his stake in Tesla. That's above and beyond what he would need to sell for his own tax obligations.
Okay. All right. Well, we'll be watching potentially for more share sales and certainly for more tweets. They do keep on coming. Bloomberg's Dana Hall. Thank you. Meantime, some vaccination news we are following. In recent months, Pfizer has begun to ramp up deliveries of its COVID vaccine outside the richest nations. However, CEO Albert Bourla won't budge when it comes to divulging the shot's secret formula. Developing nations have been pushing a proposal to waive intellectual property rights for COVID vaccines and treatments. Bourla has been leading the resistance, and he calls IP rights the blood of the private sector. Plus, New York City is opening COVID booster shots to all adults. Anyone age 18 or over who got a Moderna or Pfizer vaccine at least 6 months ago or the Johnson & Johnson shot at least 2 months ago can now get a booster. This as the city grapples with a rise in COVID cases. More than 630,000 New Yorkers have already gotten that booster. Coming up, the Great Resignation. It is apparently happening in tech more than anywhere else. We will tell you why next. This is Bloomberg. The Great Resignation is continuing to loom now over the holiday season. Thousands of workers still quitting in droves in a tight labor market where they have more leverage to move around, and employers are doing everything they can to keep up and staff up. Joining us now to talk more about it is Sapphire Partners' Kathy Gao. Kathy, thank you so much for joining us. So interestingly, the Great Resignation is being led by tech workers. Why is that?
Well, Emily, the Great Resignation is not only happening, it's accelerating, right? A record 4.4 million Americans quit their jobs in September. And 50% of workers said that they're planning to look for a new job in 12 months. There is absolutely an ongoing war for talent, and companies must adapt and introduce new strategies and new technologies to thrive. Now, we're seeing the tight labor market across all sectors, including retail, healthcare, but especially we're seeing in technology. And in tech, Emily, it's a game of musical chairs right now. 7 out of 10 workers are thinking about leaving their job in the next year. Employees have never been in such a position of power. It's a very interesting inflection point in the market.
Is there something about tech in particular that has employees reevaluating? Is it because there are so many open jobs, so many choices out there?
Yeah, absolutely. Look, there's a lot of IPO money out there right now, and venture funding is at all-time highs. There's many great opportunities and lots of competition for the best and brightest. So while some folks might certainly be changing careers or potentially exiting the labor force, my sense is that the majority are actually switching companies. Now, think about it. Traditionally, tech companies have boasted amazing office culture that really fostered bonding and loyalty. All of that went away during the pandemic, and companies are now scrambling to find novel ways to attract and retain talent.
So right now there are 7 workers for every 10 jobs overall. How do employers compete with that? What should they be doing?
To survive the talent shortage, companies must really innovate on both tactics and technology. There is absolutely a dramatic shift in the future of work that's happening right now. Not only is HR evolving and becoming way more expansive, the technologies that will support new modalities of work are also changing. As an investor at Sapphire Ventures, a leading B2B venture capital firm, we are funding the next generation of companies pushing forward the future of work and collaboration. Just to share an example, on the talent acquisition side, we recently invested in a company called GEM, which enables companies to hire passive talent faster via automation. These are folks who aren't actively looking for jobs, right? Sales teams have been using tools like Outreach and HubSpot for years to automate and leverage analytics for outbound efforts. And it's finally moving over to the talent acquisition side by necessity.
How long do you expect this to keep on happening? I mean, is this the foreseeable future? Is this just a short-term blip? Do things stabilize sometime next year, or could it go on longer than that?
I think it might go on for a lot longer, Emily. And one thing I want to point out is a lot of the discussion and a lot of the narrative around the so-called Great Resignation has been centered around challenges and frankly, fear that it's going to stymie growth at specific companies and in the general economy. But I think this is a huge opportunity. This is a huge opportunity for employers to really evolve and think about their relationship with their employees. And technology is going to have a huge role to play in that. Many of the traditional paradigms around work, like the 9 to 5 and a central physical HQ, really stem from legacy, from times when we didn't necessarily have the technology to power what we now know work could be like post-pandemic. Workers can now work anywhere, anytime with the aid of communication and collaboration software. This is a massive opportunity for employers and employees to move forward into the future together.
Absolutely. Well, we'll be watching to see how long this keeps up. Sapphire Partners' Kathy Gao, thank you for sharing more about this trend with us. Coming up, Shift4 payments rising after announcing a 5-year deal with SpaceX's satellite operation, Starlink. Shift4 CEO Jared Isaacman, who rode, of course, on that SpaceX Inspiration 4 historic trip, says payments and e-commerce is a huge untapped market in space. He will join us next to tell us why. You don't want to miss it. Meantime, WeWork shares ending up 3% Monday. The shared workspace company narrowing its losses in the third quarter. It also reported an 18% decline in revenue for the same period. It's WeWork's first financial results as a public company after merging last month with a blank check firm going public via SPAC. This is Bloomberg. Let's take a look at what's going on in space, with Russia firing an anti-satellite missile at one of its own satellites, throwing hundreds of thousands of pieces of debris in smaller chunks into orbit. These are now endangering the International Space Station. The U.S. military says it's tracking the event and NASA is gathering more information. Space debris has been a growing problem, with thousands of satellites populating orbits more quickly than they are removed. Meantime, shares of Shift4 payments flying high, rising as much as 26%, the most intraday in more than a year. That's after the payments processing company said it entered a 5-year global strategic partnership with SpaceX Starlink, Elon Musk's satellite broadband venture. CEO Jared Isaacman, who also commanded SpaceX's Inspiration 4 history-making trip to space last September, joins us now. Jared, great to have you with us, and I haven't talked to you since, so welcome back. Talk to about this new partnership with SpaceX. What does it mean?
Oh, well, we're really excited about it. I mean, obviously, I'm a big space enthusiast. I love everything they're doing at SpaceX right now. A lot of people know them for putting cargo and human beings in space. What they don't know is they're building out this broadband constellation network with, tens of thousands of satellites to bring internet connectivity to some of the hardest places to reach on Earth. This is potentially like the second wave of cord cutting as people get rid of their cable modems and DSL, and they embrace, even faster broadband connectivity through satellites. So we're excited to be able to power the payments for that. We had a lot of other exciting things to talk about in the quarter too. So it's not all SpaceX, but I know that's a big one.
How many payments are actually happening in space right now? I mean, isn't the market pretty non-existent? And how fast do you actually expect it to scale up?
Well, I mean, the actual customers for Starlink are people here on Earth. And really the world is the entire TAM. You're talking broadband internet capabilities in virtually every country. So some analysts think that they'll do over 100 billion a year in subscription revenue, which is very exciting for us because, that would be a substantial lift. We touch about $250 billion in payments a year. So that's a pretty big lift. But in space, in broad general, look, space is a huge TAM. There will be an economy in TAM. That's why there will be an economy in space. That's why people are investing so much capital into what the future of space could hold. We certainly hope to play a part in it, as much as we play a part in global commerce here on Earth.
And before we talk a little bit more about space, give us the update on your commerce efforts and payments efforts here on Earth. Where is the company and how are you positioned right now going into 2022?
Oh, we're growing really fast. We met all of our expectations for Q3. We grew payment volume 90% year over year. We reaffirmed our 2021 guidance, and we set, midterm guidance for the next 3 years, an outlook of, 50% plus year over year growth. And when you do as much volume as us, that's pretty hard to hit. It means we're a share taker. 1 in 3 restaurants and hotels in the country use Shift4 payment technology. A lot of the stadiums you love to go to watch a game and order a beer and a burger powered by Shift4, retailers, e-commerce, gaming, and now we have some interesting space-based technology that we're able to contribute a very small part to with our payment services.
There's so much focus on space tourism, but a lot of research still needs to happen in space. And St. Jude's Hospital just, announced this new era of scientific discovery, this Inspiration for Advanced Research Center. Talk to us about why this continued research is still so important.
It's such a good question. You know, some people think it's one or the other. You can either invest in our future in space, or we can invest in some of the problems we have here on Earth. And I disagree. That was why with Inspiration 4, it was about, you know, addressing real problems that we have here on Earth, like childhood cancer and children and families. They don't get an opportunity to grow up and experience anything like what I've been fortunate enough to experience in life. That you can raise substantial funds for a cause like that. We raised over $250 million for St. Jude Children's Research Hospital, and still make progress for tomorrow in space, because we have no idea what we could learn out there by satisfying our curiosity to, you know, explore the stars, and just like as we climb the mountains and cross the oceans, and what we could learn in space could change or alter humankind's life, and destiny here on Earth for the better. So we have to be able to do both, and that's why St. Jude was such a big part of our mission. We were honored they unveiled the Inspiration for Advanced Research Center, and they're going to, raise, the survival rates of childhood cancer across the world from that center.
Meantime, I have to ask you about this Russia anti-satellite weapons test, creating 1,500 pieces of debris, endangering astronauts on the ISS. What's your take on this? What does this tell you about the hazards of space travel?
Yeah, I don't understand it at all, honestly. It's not hard to shoot down a satellite. Satellites, orbital mechanics would say that anything that's in orbit right now is essentially on railroad tracks. It's very predictable. I do not think that Russia or China, or even the US for that matter, has to shoot one down for people to know they can. So I really don't know what was accomplished here, other than not just endangering human beings at the space station, but it destroys satellites. The debris will take out weather observation satellites, things that can predict, storms here on Earth that, could save lives as well. So I don't see the good out of it. And if there is a lot of kinetic activity in space, and satellites starting getting blown up, it's going to really destroy low Earth orbit and our ability to go and explore among the stars. And that's unfortunate.
All right. And people going up like yourself. Jared Isaacson, Ships for Payment CEO. Always good to have you with us. Thank you for stopping by. Meantime, the head of General Electric Aviation opened to acquisitions that could make the jet engine maker, bring the jet engine maker new capabilities. GE said last week the company would be splitting into three, with aviation being one of the standalone companies. The aviation CEO, John Slattery, says electrification technologies is one area where deals could boost the company's portfolio. Coming up, a mid-pandemic picture of Silicon Valley. Are tech startups overvalued? We're going to talk about that and more with A-Crew Capital founding partner Lauren Kolodny next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Elon Musk sold shares last week and suggested he might do it again over the weekend. Bloomberg's Kriti Gupta breaks down the numbers and what we can expect. Not sure, Kriti, if he was being genuine or sarcastic in that tweet, but of course people are speculating.
It's anyone's guess, and as we get closer to the end of the quarter, the likelihood of him potentially doing even more share sales, well, that rises. Let me show you the math behind it in particular, because last week, let's just take a little bit of a trip to last week, he exercised options granted to him in 2012, about 4.5 million options, essentially allowing him to buy Tesla shares at a lower price than current value, and out of it, getting about 5 billion, well, actually, excuse me, I should say, selling them for about 13, or buying them for about 13.4 million, then selling them using essentially the share sales that he has to make up for the taxes, and getting about $5 billion out of it. And I can show you exactly what it did to the stock price, because it's a pretty clear reaction. Over the last 7 days, you can see that it's lost about 18% of its value. And those big drops there show you that's not just Tesla and Elon Musk in particular loosening his position, but of course some of those retail bidders, those institutional investors that followed his lead. And yet again, Emily, we're seeing him tweet over the weekend in response to Senator Bernie Sanders saying he might just do those share sales again, very specifically saying, want me to sell more stock? Bernie, just say the word. And the question here is it just about the Twitter poll, or is it about the options in particular? So we crunched the numbers about just how much more he really has to sell right now. And he's only exercised about 9.4% of his options, and only about a tenth of those share sales to actually accommodate for the taxes in those options. So by all the calculations, Emily, he still has about 9 million shares to sell if he sticks with the figures he's previously said to the public. And that's not accommodating for the 10% he's promised Twitter that he would sell stake in. So something to watch. We only have a couple more weeks till the end of the year. And that's really the clock that Elon Musk is racing against.
All right, Critty, thanks for doing the math for us. It is complicated indeed. Appreciate you breaking it down. Well, the area of venture capital has been red hot as investors look to find the next best thing, with the pandemic fueling the appetite for tech startups. The question, though, are we entering a bubble? I want to bring in Acrew Capital founding partner Lauren Kolodny. Lauren, thank you so much for joining us. So first of all, coming out of the pandemic, mid-pandemic, I should say we are now, what trends are you doubling down on and what is overhyped?
Yeah, so look, we have put an increasing emphasis on the intersection of climate tech and fintech as one example. I would, this is particularly important today, coming out of the COP26. So I thought timely. One example of a company in our portfolio that I think embeds this is Kettle. They're doing reinsurance for climate risk. So essentially enabling consumers and businesses to maintain insurance coverage on things like their homes to protect against wildfire. And this is so important because historically, reinsurance in the traditional industry has valued or underwritten climate risk based on historical records. And we know that that is not actually predictive of the future. And so Kettle, as one example, is using machine learning to better predict vulnerable areas for wildfire and allowing consumers to purchase that homeowner's insurance. And they're also using that data not just to help ensure coverage, but actually for prevention. So they can let fire departments and utility companies know which areas are most likely to be the most vulnerable to actually do some prevention.
Now, how are you thinking about valuation? I mean, I've been talking to a lot of investors who've said it's expensive right now. It costs a lot to get in.
Yeah, well, and we're feeling that at the early stage too. Certainly, Series A's today look like Series B's did even just a year ago. So we're very mindful of that. At the same time, tech is pervasive. When you think about the fact that 4.5 billion people now have internet access and every industry is really technology, you start to understand how some of these valuations have shifted up. And it's interesting, if you look at the unicorn report from back in 2013, there were 38 privately held unicorns at the time. Today, there are almost that many decacorns. But I do think that the markets are supporting it, and there may be a correction, but I don't anticipate multiples going back to what they were before the pandemic.
I want to talk a little bit about Acrew's mission. You called on venture capital recently to disrupt itself, pointed out how the majority of the partners at your firm are women or people of color or immigrants. You represent 3 generations from Gen X and millennials to older folks as well. How is this impacting your investment decisions? Do you believe that you are making decisions differently than other venture capital firms? And if so, how?
Yeah, absolutely. I think we just look at things through a different lens, right? All of the data out there supports the fact that diverse teams make better decisions. In fact, there's data that supports that diverse venture firms perform 30% better than non-diverse venture firms. And it's just because you have different perspectives around the table. And when you think about these markets that startups are trying to address, they're global and they're everyone. And so having as many of those perspectives represented around the table is really meaningful. And when you think about companies like Chime, which where we led one of the Series A rounds, I think at the time, it was considered pretty revolutionary because they were serving an audience of people that live paycheck to paycheck. And most fintechs were more focused on high earners. And there was doubt in the market around whether they could actually make the unit economics of a company work serving that demographic. But because of some of the different perspectives around the table, we felt very convicted in making that decision. And so we've continued to enhance that at A-Crew. As you said, 90% of us are women or people of color on our team. And I think entrepreneurs are drawn to that. In addition to our portfolio and our track record, we see increasing number of entrepreneurs that are looking to diversify their boards and their investor bases. So we're happy to be a part of that story.
There's been a big concern about women backsliding in the pandemic. We also saw funding levels, venture capital funding going to women in mixed gender teams actually dropping at certain stages. We recently spoke to Shelley Porges of Beyond a Billion, who actually said she sees some optimism and statistics showing that women are actually going now in a more positive direction so far this year. Take a listen to what she had to say.
In our consortium of over 100 venture funds, we see over 80% of them are women, people of color, or both. And we couldn't be more excited because we know that when women are the check writers, they generally over-index toward female founders. And female founders know that too and seek them out, in fact.
Are things starting to get better for women entrepreneurs, really, or not, as far as what you're seeing?
I think that they are starting to change. You're starting to see a lot more emerging managers like A-Crew that look different and are supporting female founders at the top of the funnel. We have our Diversify Capital Fund initiative, which is actually intended to help diversify late stage companies. We add board members through our network to these teams to try to enhance the diversity of perspective. So I think there's a lot happening across the board, but change is still slow. JPM and PitchBook came out with some data recently on diverse boards in particular, showing that 50% of the females that have been added to boards recently came from inside the company themselves. And while that's helpful, it really seems like a reaction to some of the recent regulation requiring more women and diverse people on boards prior to an IPO, as opposed to a really proactive and deliberate decision to bring diverse perspectives earlier on in the governance of a company. So, I think it's starting to change, but there's a long way to go.
You guys are involved in many stages of a company's life cycle, and I'm curious what you're seeing with exits now. Over the next year, how are we going to see the balance between M&A and IPOs or even SPACs, direct listings, shift?
Yeah, look, I have every reason to believe that the public markets continue to support great outcomes for great companies. We've seen, a lot of companies take that path with great success of late. And, I look at fintech, where I spend most of my time, and companies like Nubank that are anticipated to go out the door in the coming month. A company like that with great fundamentals that serves 48 million users across Latin America. And have brought people into the financial sector through their application. I anticipate that they and others like them will continue to have great outcomes. So in fintech, I continue to believe that the IPO market is really exciting.
Lauren Kolodny, A-Crew Capital founding partner. Thank you for joining us. All right, coming up, transforming the trucking industry. Embark Trucks goes public, led by the youngest CEO of a public company. We're going to have more on the tech behind their automation and how they stack up to the competition. That is next. This is Bloomberg. Transforming trucking. That is what then 21-year-old Alex Rodriguez set out to accomplish back in 2016, armed with just research and ideas. Now he's the youngest CEO of a public company at just 26. Embark went public last week via SPAC and is aiming to transform the trucking industry with its self-driving trucks. The deal valued Embark at $5 billion. For more, I want to bring in co-founder and CEO Alex Rodriguez. Alex, congratulations and thank you for joining us. So talk to us about where the trucks are now. What can you do and what is the vision?
Thanks for having me, Emily. It's a super exciting time in the world of self-driving trucks. Embark has a fleet of trucks operating today in the US Sunbelt, making commercial deliveries for big partners like HP and AB InBev. And so we're really at an exciting inflection point. You can probably see some of the videos here of trucks being on the road, making deliveries, going from the edge of one city to the edge of another and doing that autonomously. The next step, the reason that we're going public last week, is really to bring in the funding to allow us to take that from a small scale and put it into tens of thousands in trucks in some of America's biggest fleets.
Let's talk about how you scale. Aurora has partnered with FedEx. Too Simple has UPS and USPS. What kind of logistics partnerships do you have at this point?
Embark has some of the leading partnerships on the logistics side. We're working with folks like Knight Swift, which is the largest trucking company in the United States, with Werner, with DHL. And out of our partners, we have 14,200 reservations, which is more than double the nearest public comp.
So how do you make money? Talk to us about the business model.
Yeah, that's one of the things that really differentiates Embark. Embark is a software-focused company, and we have a software as a service business model. So we license software to those big fleets I just mentioned, and those are the people actually buying the trucks and running the operations. And then Embark is charging between 30 and 40 cents a mile, depending on the length of haul, for the driver software that we've developed.
When do you think we see this at scale? For example, when we're driving on the roads, how many years from now will we be, almost sure that that truck next to us is using self-trucking technology?
I like that, self-trucking. It's a big industry. Maybe I'll start there. And so I think in order for every truck on the road to be transformed, that's going to be a long time. But in order for it to start making a big dent and improving efficiency across the US economy, I think that's coming really soon. Embark is looking to have over 2 billion miles driven in 2024 on the system. And so you can really start to see some of that scale coming to a road near you fairly quickly.
And does it happen sooner than self-driving cars? I think many of us expected self-driving cars to be on the road sooner or faster than they have been. And maybe it's a consumer safety issue and there are still so many concerns and so much red tape. Does the trucking industry, self-trucking industry, develop much more quickly than the self-driving industry for consumers?
I think that's really the key insight that Embark had when Brandon and I started the company in 2016, is that trucking, by focusing on highway driving, can really be a simpler problem. And that was really our core insight. We started Embark back at a time when everyone, as you say, was talking about cars. We focused exclusively on trucks. Today, we're the longest running program that has been running self-driving trucks on public roads. And I think that's a huge advantage. It turns out cities are really, really complicated, and highways are a much more structured environment that's better suited to robotics.
Interesting. Well, great to hear the vision. Alex Rodriguez, co-founder and CEO of Embark. We will keep watching your self-driving trucks. Meantime, Amazon is stepping up its efforts to make workers in its California warehouses feel more safe. The company has reached a deal with the state's attorney general to keep workers more informed about safety protocols and COVID outbreaks. The changes include notifying workers within 1 day of any COVID case on the property and local health agencies within 48 hours. California is home to more Amazon employees than any other state, with more than 153,000 workers here in this state at the end of last year. Coming up, we'll talk about the latest in the Theranos trial as the government expects to rest its case this week. And as we head to break, let's take a look at shares in EV maker Lucid. We're seeing gains in extended trading after the company announced it strengthened its balance sheet to $4.8 billion in cash in the third quarter. This is the startup's first quarterly earnings report since listing via reverse merger back in July. Lucid also says it's on track to produce 20,000 vehicles next year. This is Bloomberg.
after telling investors that it will make as much as $1 billion less than expected in fiscal year 2022, Peloton followed up the bad news by previewing a new product that it believes can put its revenue growth back on track: a home strength training device for your TV. The Peloton Guide comes out early next year in the US and other countries for $495. A user attaches the device to their TV where they can view strength trainers perform several different exercises, whether that's full body workouts or lifting weights, and the user can follow along live. The guide has a camera and AI so it can watch you as you follow the instructors, and it can provide you with live feedback to ensure you're doing the workout correctly. The guide also includes a new heart rate armband so it can measure your intensity while working out. That band will also work with the company's bikes, treadmills, and digital phone apps. The guide can also be controlled by voice, and the company told Bloomberg that it plans to add similar features to its bikes and treadmills in the future. Will the Peloton Guide be enough to help propel the company as the pandemic continues to ease? Only time will tell. I'm Mark Gurman. This is Power On.
And you can sign up for Mark's weekly Power On newsletter at Bloomberg.com. While the trial of former CEO and founder of Theranos, Elizabeth Holmes, continuing, the founder of the failed blood testing startup once hailed as the next Steve Jobs, is accused of multiple counts of conspiracy and fraud and faces up to 20 years in jail. And as we enter another week packed with witnesses, let's bring in Bloomberg's own Joel Rosenblatt, who of course has been in the trial every step of the way. Joel, it is dragging on. The government may rest its case this week. How convincing has the case they have brought so far been?
Well, the last time I was on, Emily, I told you that the case was convincing, and it's become only more so. We've heard from more witnesses. Since you and I last spoke, we've heard from investors in particular. The focus has been on investors. And she faces a very difficult case. Like I said last time, though, is now kind of buttressed by all the evidence and the witnesses that we've seen.
What is the defense? What kind of a defense are we expecting her to put up? I mean, there's been so much speculation about what kind of things she could claim. Will she take the stand herself? At this point, what do we know?
Yeah, well, we don't know. We don't know much, but we're about to find out, and that's why we're at what is, to me, by far the most interesting part of the trial. This is the crossroads for Elizabeth Holmes. So she has essentially three options. One is to say, I'm not going to, the government hasn't met its burden to prove me guilty beyond a reasonable doubt, so I don't have to present a case. I think that's very unlikely given the strength of the case the government has made. The second is that she can just make a case the way the government has, built on other witnesses, to rebut essentially the government's case, point by point, very difficult. And then the third option, as kind of part of the second, is Elizabeth Holmes testifying. That's what everybody's kind of hoping for. That's what my sources say is most likely to happen, almost because she has to. She's just kind of forced to, given the case she faces.
So talk to us about the most damning evidence. I mean, some of the stuff that's emerged just in the last few weeks, that Theranos lifted logos from pharmaceutical companies who had already rejected them and put those logos in their reports to say that they were supporting them. I mean, that is pretty brazen.
Brazen's the perfect word for it. That's the word that I kind of always think about. It's when you see it in court, it's especially compelling, and you think of yourself as a juror. The company lifted the logos of Pfizer, of Schering-Plough, and put them on reports claiming to endorse Theranos technology when in fact those very companies had rejected it. To me, it's the kind of lie. It's the kind of plagiarism that you might see in elementary school. I mean, I don't mean to demean her or demean the situation, but it's just brazen. It's just shocking. And to imagine that as a witness, or as a juror, it's just astounding. So there's that. They've heard from employees, very high level, the highest level employee, besides her and Sunny Balwani, explaining how the technology just didn't work and explaining to her how it didn't work. So she knew that, evidence that she knew it didn't work, and kept telling people, and especially investors, that it was endorsed by pharmaceutical companies, that this technology was great. And there's more to that list. I'll go on if you want, but the evidence has been strong, intermittent. There's long stretches of kind of boring testimony, but then peppered into it is these very stunning examples.
These explosive moments. Just about 30 seconds left, Joel. How long do we expect the defense to make its arguments? I mean, the case has already been going on for months.
It's been going on for months, and it just all depends on what Elizabeth Holmes does. If she puts on the defense that I mentioned, and then if she testifies, the prosecution has wide latitude to ask her about all of this. The door is wide open to them, and they will be aggressive. They're going to have to be careful. They can't be overly aggressive, but that could go on for some time. It just all depends on how it plays out. I think we're looking at mid-December. No juror wants to be in this courtroom past Christmas.
Right. All right. And we appreciate you going down to San Jose and being there every day. Bloomberg's Joel Rosenblatt, thank you for that update. We'll continue to watch your reporting. And that does it for this edition of Bloomberg Technology. We've got a great show coming up for you tomorrow. The CEO of Roblox will be joining us, David Baszucki, right here on Bloomberg Technology, and Stuart Butterfield, Slack CEO and co-founder since being acquired by Salesforce. It's been a while. It'll be good to catch up with him. Thank you all for watching this edition of the show. I'm Emily Chang in San Francisco. This is Bloomberg.